Hello, my name is Victor, and in today's video we are going to be talking about two specific stocks. One that is doing incredibly well so far in 2026, and the other which has been struggling and just keeps receiving more bad news. So without further ado, let's go ahead and get things started. But just before we get started here, I want to show you something to drive my point home regarding the first stock we are going to talk about. VOO, which is an ETF that tracks the S&P 500, so far year to date in 2026 is up 1%. Keep that in mind. Because when I had a look at Starbucks year to date, they are up 11% so far in 2026, which is absolutely amazing. In fact, that's so crazy because 11% is what you would expect on average from the S&P 500 throughout the entire year. So for Starbucks to be up that much in about 2.5 weeks, what exactly is going on? And after I did a little bit of research, I found some very exciting news regarding Starbucks. And the exciting news is that Starbucks is going to be teaming up in a collaboration with Mr. Beast. And this is incredibly exciting as an investor because this absolutely will target the younger demographic. If you're like me, I'm in my early 30s, I would say I'm a millennial. I honestly have never watched a Mr. Beast video in my life. But I know from speaking to younger family members, some of my younger friends, Mr. Beast is absolutely huge when it comes to Gen Z. It turns out that with this collaboration, Starbucks is going to have something called the Cannonball drink, which I guess is in reference to something that Mr. Beast is doing with one of his shows, I guess? If you know more about it, be sure to leave me a comment down below because I'm telling you, I don't keep up with Mr. Beast, but I just know that he has a massive influence on the younger generations. And it's because of this that I think, in my opinion, that this is excellent marketing on the part of Starbucks because you really don't have to tell like a boomer or a millennial to go grab some coffee. I'm down for some coffee whenever, no matter what time of day it is. But I feel like over the last couple of years especially, Gen Z tends to have this, what's the word I'm looking for here? They have a very negative view when it comes to Starbucks. But I would think that having Mr. Beast teaming up with Starbucks might help alleviate some of those negative views regarding not only the company, but in general, if you can just have Gen Z come to Starbucks, grab a drink, and hang out, just like Brian Nichols has mentioned about his Back to Starbucks plan, this is exactly how to go about that. Because if you can have Gen Z and the younger generations being at Starbucks, they are going to be on their phones, they're going to be taking pictures, posting videos on social media. I think this is exactly what Starbucks needs in order to have this next generation of caffeine coffee drinkers join the Starbucks brand and be all for it going into the future. But I guess the big question is, do you think Gen Z will buy into it? Do you think that this collaboration with Mr. Beast will be enough for the younger generations to hop on board and start liking Starbucks again? Honestly, I think it's excellent marketing, but I guess we will see over the next couple of years to see if that translates into the numbers. Moving on now to stock number 2 that we're going to be discussing, and that is going to be PayPal. And as you can see by this chart here, PayPal is not having the type of year that Starbucks is having in 2026. As a reminder, VOO is up 1% so far year to date. PayPal year to date is down 2%. Already, we just started the year and PayPal is already continuing the negative trend that they ended 2025 with. But to be fair, it seems like PayPal just cannot catch a break, whether it be from retail investors or Wall Street, and even analysts are just continually downgrading the stock. The amount of selling pressure on PayPal right now is tremendous. But let's go ahead and have a see what this analyst had to say about PayPal, and I'll give you my opinion on whether I agree or disagree. But okay, the analyst in question is somebody named Piper Sandler, and they downgraded from $76 per share down to $74 per share. And in the same article, Piper Sandler said that they had a neutral rating on the stock. So for those of you who are new, if you're neutral on a stock, it doesn't mean that you're willing to buy the stock, but you're not willing to sell the stock either. So you're kind of just holding the stock and seeing what happens. But what's interesting to me is they downgraded down to $74, and that would still be a 32% increase from where the stock is currently. And you know, that really begs the question, exactly how reliable are analysts' price targets anyway? Well, if you want my completely unfiltered opinion, I am not the biggest fan of analysts because, in my opinion, these analysts are just sheep. They follow each other. Whenever a stock is down, that's when they downgrade the stock. If a stock is shooting up, doing great, guess what? They are upgrading the stock and telling everybody to buy. Like, you really can't listen to these guys. And as an example, I have an article here from 2022, so about 4 years ago, and during that time, Meta could not catch a break. They were kind of like how PayPal is doing right now. They kept going down, the stock price was tumbling, and as expected, when a stock is doing poorly, then analysts tend to jump in and start downgrading the stock. And as you can see by this title of this article here, Meta plunged 24%, and that was their lowest price since 2016. In November of 2022, you could purchase Meta for $91 a share. $91 a share, keep that in mind. During that time in 2022, when Meta was getting kicked, they could not catch a break, nobody wanted to own Meta, Morgan Stanley came in and downgraded the stock. They had a price of $205 and downgraded all the way to $105 because they expected the company's issues to persist as Meta was increasing spending to build AI capabilities. So, does that sound familiar? I hope it does. But let's fast forward here to the following year in 2023, and let's see, were the analysts right? Or were they absolutely dead wrong? In November of 2023, so exactly 1 year from the time of that article and that downgrade by Morgan Stanley, Meta had jumped up from $91 a share to $314 per share. But just have a look at this graph and you can see that Meta was absolutely nowhere near its peak, with over the next 2 years, the amount of upside, it basically doubled up again where it reached its peak in 2025. If you ever ask me, well, why are you buying this stock right now if analysts keep giving a downgrade or are talking so negatively of the stock? I personally, in my opinion, do not take into consideration analysts' opinions, analysis, expectations, whatever you want to call it. Because if you ask me, analysts are kind of like sports commentators, where the stock and actual retail investors like you and I are the actual athletes in the game, because analysts are paid to give their opinion, to give their analysis, but they aren't true investors like you and I. We are in the trenches. We go in every single day, every single week. We are looking at our portfolio, thinking critically about what we want to do and what stocks we want to own over the next 3 to 5 years. We're not thinking about what the stock is going to be doing over the next week or 3 months or 6 months. None of that matters. We want to look at the fundamentals of a stock and think critically about where the stock is going to be over the next 3 to 5 years. Whereas an analyst will look at a stock, they will see what other analysts are saying about the stock, and generally 90% of the time they will just say whatever everybody else is saying. If the stock is going down, they downgrade the stock. If the stock is going up, they upgrade the stock. And in my humble opinion, that is not how investing should go. And it has not been the case in my experience. Because whenever a stock is going down, that tends to be when I want to buy. And that was exactly the case in 2022 because I was personally buying Meta at those prices. Meta kept going down, everybody kept seeing the stock struggling, and I thought, Meta has been oversold and it looked to me like a great buying opportunity. And history may not repeat, but it tends to rhyme. And that is why, given all of the hardships that PayPal is going through, I am continuing to buy the stock because I, again, think that it has been oversold. My current average cost for my position is just under $60. Now, PayPal might come in with their earnings here in the next 2 weeks, blast it out of the ballpark, and I really hope I've had enough time to build up my position by then. But on the off chance that PayPal continues to struggle until second quarter of 2026, I will continue to buy the stock because I think that 3 to 5 years from now, PayPal will be much higher than it is at its current price right now of like $56 or some crazy amount. So to me, any analyst downgrade is just a buying opportunity for me. If y'all want to send PayPal down to $50, $45, so be it. I will be able to buy it at a cheaper price, which is what I want to do when I'm building a position. And if you watched my previous video where I did a full analysis on PayPal, you know that I want to grow this position to be about 3 to 5% of my portfolio. So at the very least, I'm looking to triple the size that I have right now. But I would love to get your opinion on both of these stocks. Do you think that Starbucks will continue to increase throughout 2026 with the hype that comes with this collaboration with Mr. Beast? And do you think that PayPal will turn the corner here in 2026? Or do you think they will continue to struggle the way they had through 2025? Would love to get your opinions down in the comments below. If you have made it until this point in the video, be sure to give me a like. It helps out tremendously. And as always, I'll catch you in the next one. Peace.